Hey folks, welcome to Market Intraday Analysis by InTheMoneyStocks.com, your leaders in pure technical analysis, avoiding all that Wall Street hype. Today's video for Tuesday, November 8th, 2011 is sponsored by Realtik. Alright, let's get right into the charts here. Markets having a nice surge up over the last 30 minutes, 40 minutes, taking us back to the highs of the day essentially, now pulling off that key resistance level at 127.25. This morning I gave this to members in the intraday stock chat. I said this is your level to look for a short. Sure enough, look at the markets. They go right up to that pinkish line and look at the pullback you had. Now again, we retraced back up there. Now you're starting to get a little bit of a pullback. What's going on? What's causing the continued intraday volatility that we're seeing today? The same thing as yesterday. That's the simple answer, folks. Yesterday we saw ups and downs with Greece and Italy. Today the same things. Earlier today there was a key vote on a budget in Italy. Ultimately, Berlusconi comes out on top, but he loses majority. Now, the recent rally took us up because it looks like after the austerity vote is finalized, then he will resign. And the market seems to like the idea of him resigning and someone else taking over. Unity over there in terms of the austerity measures must be completed and so forth. And that's, again, what we're getting, this nice pop. Now it's pulling back a little bit off that resistance level. But nonetheless, that explains the intraday volatility. It's the way it's been. It's the way it's going to continue to be. The U.S. markets are really in for continued volatility because of Europe. I'd love to say it's because of this or that here in the U.S., earnings or the Federal Reserve or whatever. It's frankly not. And we all have to just face the facts that this is the way it's going to continue to be. So let's trade it, right? And that's exactly what we're doing today in the intraday stock chat. Come join the 7-day free trial to test out the intraday stock chat. See live charts. Hear us live over the microphone. Ask questions live. You can do it all here at InTheMoneyStocks.com and make money every single day. Now, if you wanted a little bit more safe, kind of relaxed trading environment where you're doing swing trades, holding for a couple days while you're at work, then the Research Center is for you, and there's also a 7-day free trial there. Get nightly videos, get no hype live broadcasts where you can ask us questions, get all this and more live trades, etc. in the Research Center 7-day free trial. Come to In the Money Stocks and try it out. All right, let's go back to the charts. Markets, again, just fluctuating. Notice how the sell-off took us down here, and this was another level I gave out to the chat room, and I posted it on Traders Life 24/7, which is the best social forum for pure members based on the methodology here at In the Money Stocks. When you become a full-fledged member here at In the Money Stocks, you get to join that, and again, you can discuss trades and so forth with Traders 24/7. But bottom line is, see this line connecting the high pivot from last Thursday to Monday's high? That line was a breakout yesterday, which told us we were going to go higher today. This is something I talked about in last night's technical analysis video, which is part of the Research Center. Sure enough, we gapped up. Now, as we came into this upper resistance right here, we sold off. Where did we go? Where did I say to buy the market? Right here on a retrace back to that line. So again, we basically today, just to give you an example of what we do here at In the Money Stocks, we nailed the high of the day, we nailed the low of the day, and again the high of the day. So if you want to know, and again, this is on an intraday basis. We do this on the daily all the time anyways for swing trades. And we have live swing trades out there, folks, waiting to get triggered. They will get triggered. We're going to make more money. Last week, we made tons of money. The week before, same thing. The week before that, same thing. And the same will be true for this week and next week going forward. Because, again, we don't care where the market goes. I couldn't care if the market's going to go up or down as long as the technicals are telling me which are going to be the key levels to play for profits. You know, let them do whatever they want to do in Europe. I don't care the effects here in the U.S. There's always going to be a trade-off of it, and we'll continue to trade it based on the In the Money Stocks methodology. All right, so again, that's what you have going on here. If we take a look at the dollar, you can see the dollar sold off pretty sharply on that Berlusconi news. And again, notice how the markets are just inverse to the dollar. As the markets were going down, the dollar was popping. Now the markets have rallied up sharply, and the dollar had come back down. So it's just inverse. And remember, always remember that the dollar is inverse and controls the markets in an inverse proportional ratio. All right, what else do we have going on today? What are some key stocks in play? One of the key stocks I want to bring to your attention is Apple Computer. I talked about this yesterday. You can see it's trying to get above that 20 moving average. If it gets above, you have to look at Apple as a neutral until it gets above here. If it takes out this level at 409 on a closing basis, then it's going to be a bull buy all the way to a double top up here. All right, now by the end of the day, if it comes back underneath the 20 moving average and closes below 404.25, then what that's going to tell you is that it's going to head lower and it's a short. So anything between the 20 and the blue line is neutral. Above the blue line is bullish. below the 20 moving average yellow line right here is bearish. And any sort of break below the 50 is very, very bearish, as this would probably go all the way to the 200 moving average down here. So again, I want to give you guys kind of the inside track on how to read this chart. That's how the methodology teaches us to read it. And again, that's why it's so accurate. 80 to 90% success rate on profits. That means 8 out of every 10, 9 out of every 10 trades we do going to be a profit here at InTheMoneyStocks.com. All right, let's go over Amazon's chart, and we'll take a look at some of the financials afterwards. Amazon's kind of just floating up here. The one thing that strikes me on Amazon, folks, obviously on earnings, it comes down to the 200 moving average, which is a technical support level. It bounces up nicely, then now is consolidating sideways to higher. This 2 moving average, see how the 20 is sloping down? These will meet. That's bearish. When those two meet, it's called a golden cross to the downside there, and will be ultimately a bearish signal. So I wouldn't be surprised if probably by Thursday or Friday, if you see a golden cross here, and that may tell us, assuming price is still below that area, that you're going to see a fall on Amazon. All right, so keep an eye on that chart. Let's take a look at Goldman Sachs. Goldman, again, interesting chart here. It boosted up, then pulled back into the multiple moving averages, which were support. It's kind of just going sideways, creating a little bit of an in-spirit of bearish pattern, but you wouldn't look to short this, as I think I said this yesterday as well. It's bearish pattern, but with massive support. So again, that's a negative and a positive equaling a zero net gain. You ultimately stay out of that trade based on the methodology. JP Morgan, generally the same chart. You can see the 2 moving averages below price. The big drop here, bearish pattern, but you still stay away from it because you have a negative and a positive. All right, let's look at some other trades out there. What are some other key stocks? Let's look at Chevron, CVX. Chevron, very interesting chart here. You're slowly getting up to gap fill double top up here. Oil continues to go higher. There's a lot of concern about what's going on in Iran right now and the relation to Israel and the United States. There's talk that they're very close to getting some nuclear weapons and so forth. Close could mean a year or two away, but either way, that's the way things are shaping up right now. And again, any sort of little craziness there is going to boost up oil a little bit and therefore push up some oil stocks in the short run until you get oil to about 115, and then all of a sudden that becomes a negative drag on the economy. Either way, just looking at the charts, resistance on Chevron double top right there at around 110. ExxonMobil, let's take a look at Exxon. Exxon moving up here, 200 moving average is going to be a little bit of resistance, but only a minor level. Once you get through that, you have to start thinking double top up here as well. The overall pattern on Exxon here is actually an in-spirit of bearish pattern. And again, I would say as long as you stay below the 200 and don't close on a daily close, this is the daily chart, as long as you don't close above that 200, you can look at this as a bear flag that may play out to the downside. So it's kind of imagine that as the one side up, so above the 200 is bullish, and as long as it's below, it actually does have a little bit of a negativity to it based on that chart pattern setup. All right, again, guys, right now it's all about just watching that European issue go on. Italy is really in the forefront. Greece has kind of stepped back for now, but we're waiting to hear how easy does Berlusconi really resign, or is this just posturing again? And the markets are just on a yo-yo, up, down, up, down. And again, as we all know, no one wants to continue to hear about what's going on in Europe, but it really, frankly, is the key to what's going on in this market here. There's no other way to describe it. Fundamentals don't mean anything. Technicals do, obviously, and that's the only true indicator how you have to follow the market is based on technical levels. All right. Let's take a look at some other stocks. How about Google today? Google's up about $2.85. I love Google as a shorting opportunity. I'm going to show you the level right now. You get Google to hit this line here. That's your shorting level on Google. All right? And again, that's a beautiful chart connector. You go right into that level, which is right around, let's see what level that's at. Looks like it's right around the 620-ish area. That will be a great little resistance level on Google. All right, let's take a look at Baidu, some of these Chinese stocks. I've noticed a lot of Chinese small caps continue to show some signs of life, folks. Baidu continues to be up a little bit today. It actually is forming an in-spirit of bullish pattern. This is a nice bullish pattern on BIDU. Triple necktie below, which is going to give it support. As long as price stays above that, and you have this pattern in here, which again is an up move, sideways consolidation, in spirit of bull flag, you have to favor the upside on Baidu right now. First resistance on Baidu, if it starts to make a move to the upside on the daily chart, would be a move to 151. If you get through 151, very easily it could go all the way back to about 165 or 160 area, right up there. Truly an amazing little chart setup there. I love when it has the triple necktie below it because it just gives you an obvious signal. As long as you stay above, it's bullish, should play out to the upside. If by chance it gets below, you just stop yourself out. Very simple, keeps you a tight stop right there. And let's be honest, the average investor out there, the average trader, the problems they have is the discipline of cutting a play when it doesn't work out and taking the small loss. Most people out there say, oh, I'll just hold it on for retirement, and then they end up losing 50% of the value and, You just can't trade like that. It's never going to work. That math does not work. If you're going to bang 8 out of 10 winners, 9 out of 10 winners like we do here at In the Money Stocks, on the 1 or 2 losers that everyone has, most people lose 5 out of 10, but we're only going to lose 1 or 2. You have to be aware. You just cut it quick. You move on. Bam. One winner should knock out one loser, and then you have a net 6 to 7 winners, just building that profit zone up, 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 and up. And that's how you build your nest egg for retirement and just continue to do so and make a career out of being a swing trader or day trader. All right, lastly, let's talk some small caps. What am I watching? I have to say I continue to like some of these small cap Chinese solar plays. Chinese stocks have started to get hot. The solars are obviously the weakest play. There's so much bearish action out there. So much talk about how solar is negative, negative, negative. That's where I step up and start liking it, folks. So I'm telling you right now, as long as CSIQ, and this is Canadian solar, so it's a little different, but it still has the same principles on the technicals. As long as CSIQ stays above $3 on a closing basis, it is bullish to me, and I like this chart. If it closes below 3, then it's a non-existent play, and you exit the trade very simply. All right. In addition, another one that I like is HSOL, dead low, same chart, and the same thing applies here. As long as it stays above this line right here, the 52-week low, right around the 185 area, I look for a pop on this at some point. And again, First Solar is really the key here. You want to see First Solar starting to inch up a little bit, right now down about 28 cents on today. But as long as this starts to make a move, and again, one thing I think about the solars as well, if you start to get a little bit more upside on oil, it probably will help solar pricing as well creep back. And again, a lot will have to do with Iran, how that plays out. So I'm watching these very, very closely as well. DPTR is a nice oil and gas play here. I love this base chart. This is just a U.S. oil and gas company. I mentioned it yesterday as well. I love this chart, folks. I love it. As long as it stays up in this upper range, I think it's going to creep and break out. Upside is easily 20 to 50% gain, most likely in about a week or two. All right, so again, focus on that one. I think that's one to watch. Now, again, any small cap I mentioned carries a ton of risk with it, so understand that. And you never want to overload. You just, I just take small positions in these things, very tiny positions. If I make 50%, it's a huge gain just because it's 50% or 25%. As opposed to IBM short or long, which I'm probably taking 5-10% on. Same amount of money made. It's just you're making a lot more on the small cap because you're buying a smaller amount, but you're making percentage more. All right. In any case, oil and gas, with oil trading above 96 a barrel here, I don't see how DPTR doesn't start to shape up and see a run. It's a very thin one too, 187,000, 188,000 traded today. So when it does go, it can go big. All right, first resistance for me personally that I'll be looking for is right here. When it starts to run, this is your spot to look for a target. Target would be $3.30, which is a full dollar gain on a $2.30 stock. Beautiful things right there. All right, we'll stay watching this. I'll keep you guys updated, and good stuff across the board. Come join us here at InTheMoneyStocks.com. Take that 7-day free trial. Step up your game. Join the elite. Stop falling into the trap of listening to the media and the nonsense players in the media on CNBC, on Bloomberg. Step up above the institutions even, and just make money in any type of market. Take care, guys.